So thank you everyone today for joining us for our webinar on where to buy for under 500,000. My name is Rich Harvey. I'm the CEO of Property Buyer. And today we have Terry Ryder, the Managing Director of Hotspotting. Great to have you on board, Terry.
Wonderful to be here, Rich. As you know, I love talking about real estate and about markets. And I particularly like talking about this end of the market because I think this is where most people are. This is what most people want to talk about, being able to buy affordably, get good rental yields and capital growth. So
yeah. And look, we've got record numbers who've registered for this this webinar, Terry. It's more than double any of the other webinars we've had, which I think speaks to the topic. It speaks to the sort of the constrictions that people have got on borrowing capacity, and also congratulations for registering everyone, because it shows that you're actively looking to grow your wealth and to get ahead and to provide for your family. So well done today. Just some bit of housekeeping. Please, if you've got a question during the presentation, we would love to hear from you. So in the Q&A box or in the chat box, just write your question and we'll aim to get to that either during the presentation or in the Q&A section at the end, and we'll try to answer that. Also, this webinar will be recorded. I'm recording it and we'll be sending out a link to everyone who's attended along with a copy of all the slides. So don't panic if you miss something today. There'll be a replay and you can get it. And for those that couldn't log online in time, again, they'll be able to get access to the replay if they've registered today. All right, so let's get straight into it. So Terry, before we start, just one thing, I've got to give the traditional disclaimer. Again, we just want to encourage everybody to seek professional advice. My view is that you shouldn't be making information just purely on decisions on your own. You definitely need a team around you. So you need a good solicitor, a good mortgage broker, and just want to present that the information to the best of our knowledge is accurate. But we just have to provide a general financial disclaimer that you do need to get professional advice before taking any action. So Terry, what I'd like to talk about is, I guess, the fundamental reasons as to why we've selected a bunch of areas. We've got about 15 or 16 areas to share with our audience today. They've all been handpicked by both Terry and I, but these are some of the reasons why we've selected these areas. Firstly, we try to find areas that are in affordable, that they're high demand areas and they're cheaper, and obviously a lot cheaper than capital cities. Now, a lot of people used to think that you can't make money in regional areas, but that's a complete myth, isn't it, Terry?
absolutely. That's been shown over a number of years now. The regions have been outperforming on capital growth. And if you look at the latest figures out today, in fact, from CoreLogic for the month of April, for the most recent quarter, and for the year to date, the combined regions have had higher capital growth than the combined capital cities, both for houses and apartments. So those are relevant statistics, but also the figures out from PropTrack showing the growth since COVID, the last 4 years, the leading location for all regional areas or the outer ring areas of capital cities like Adelaide.
Your second thing is, third thing is just rental vacancies. Australia is in a rental crisis, even in the regions. So, and the cost of construction has gone up so much that it's often cheaper to buy than it is to build. So we're finding that we're getting really strong rents and very low vacancy areas. Also, we're picking areas that not just have a good infrastructure, but good amenities. I mean, it's one thing to have a train station or a hospital or a school nearby. They're all essential services. But if it's a livable area that's got beautiful lakes and waterways or beaches, it really adds to the attraction for owner-occupiers to buy there. So we're finding a lot of these areas that we're going to be recommending today have both a good infrastructure and good amenity as well. Another thing we look for is population growth. Now, I wrote a blog the other day that population growth on its own is not a sufficient driver because it all comes to do with the supply of land in an area. But population growth is a very important factor because it drives demand. And we're finding that a lot of these areas require a lot more workers, and therefore that's rising the demand for property in those areas. And equally, diversity of employment, that's incredibly important. And we'll be talking about no-go zones later, but here's the spoiler alert. Don't go and buy, mining town, because where you buy in areas that are driven by one particular industry, you'll find that that's very difficult longer term to see consistent capital growth. You want a range of employers so that if the bottom falls out of one part of the market, it's not going to mean your tenant is walking out the door and you don't have someone to replace them. We're looking for areas where there hasn't been a great amount of construction, where there's a shortage of dwellings. And as I mentioned, lifestyle appeal. That lifestyle appeal, particularly for owner-occupiers, is something that is really, really key. Anything else you wanted to add to those comments, Terry?
Yeah, I think that a lot of people might think that if you're buying in the cheaper outer ring areas, you're not going to get those lifestyle factors, but that's not true. One of the things that we actually rate when we're looking at an area is not just the basics like schools, shops, and public transport, but parkland. And it's an area that's got lots of green spaces, can offer a lot of lifestyle, but not that expensive to access in terms of the cost of the housing. So those are factors that can be quite surprising in some of these more affordable areas.
Fantastic. Well, Terry, let's get into the various areas. So first cab off the rank is Townsville. So we've selected Townsville as an area which is really driven by three pillars to its economy. And those pillars are simply defence, agriculture, education, mining, and tourism. And it's also a major transport hub. So you can see I've got a nice photo there of the Castle Rock there in the background, but Townsville's a really attractive city. I really like it even more than Cairns. It's got great waterways, not far to Magnetic Island there, but it's a very competitive market, and properties or houses that are coming on the market are selling in a very, very quick time. There is, again, a real shortage of housing, high demand from workers and tenants in that area. We're getting access with our buyers agents in the areas to a lot of off-market stock. But we have our clients that have been needing to be ready to transact quite quickly. And we're seeing, as you see there on the slide, houses you can buy between 300 to 500, yields 6 to 7%. Terry, tell me why you'd advocate Townsville as being a good area to invest in.
I love Townsville, Rich. I think you could argue that it's the strongest regional city in Australia in terms of its economy. It's got so much strength in diversity. You've mentioned all the different strong economic sectors there. That's what we love about it. It's not just reliant on one or two. It's got education, military, tourism, resources, manufacturing. It's got it all, really. And it's very affordable. You can buy solid houses in the 300,000 there and get yields above 6%. The only thing about Townsville that people need to be aware of is that insurance costs can be high because it's marked down by the insurers because it's in the tropical north.
That's right. I guess also it's not all that glitters is gold either. Someone's been saying here, BJ, this has been the hype for the last 2 to 3 years. How long will it last? Like a lot of these towns, they're going to be driven by different factors, but we're a big believer in Townsville. But there are pockets to avoid as well. And this is where you've got to drill down into the individual research of the suburbs. But we avoid particular suburbs that have got large amounts of housing commission. We definitely avoid any suburb that's got more than 15% housing com. We like to buy in pockets where there's more than 35% of the dwellings occupied, no more than 35% occupied by renters. In other words, we want 65% owner occupiers in an area. So if you go and buy in an area that's got 50% or 60% investors, you're competing against a lot of other investors. And it's the owner occupiers that help to stabilise that market as well. So yeah, and look, you obviously want to avoid flood and fire affected areas. So the key things that we do as part of our due diligence process is to look at the flooding maps, look at the fire maps, and make sure that the house in question that we're looking at is not going to be affected by those particular zones. Is there any other kind of infrastructure that you think is coming to Townsville that you would say it's a good area, Terry?
Well, it's one of the other things that we really like about it. We do tend to favour areas that have a big infrastructure spend in the mix. And Townsville is one of those places there's quite a lot that's underway or in planning. In recent years, they've had the big new sporting stadium and infrastructure like that can really put a regional city on the map. Expansion of the basic facilities like the export port, the international airport, expansion of the university. James Cook University is so important to the economy of Townsville. So there's that. A lot of when the resources sector is humming, that's good for Townsville. It's not reliant on it, but it certainly benefits when things are strong as they are now. And a lot of those resources companies that operate in regional Queensland have their headquarters in Townsville for reasons, including the export port and the airport.
Fantastic. Someone's asking for insights on Kelso Condon. Condon has a median house price around 335,000. Its 10-year average growth rate's been around 6%, giving an average yield of around 6.8%. I haven't got the stats on me at the moment for Kelso, but the average 10-year growth has been pretty decent for a lot of the suburbs, as we said, in Townsville. A real mixed bag though, so you do need to be really careful about which particular area you're buying in. But you're going to be finding the yields certainly in excess of 5%, upward to even 7% in the right areas as well. Let's move on to our next town, which is Mackay, and beautiful area. Terry, tell me more about the property market and reasons why you think investors should go to Mackay.
Yeah, once again, it's a central Queensland regional city that's growing. It has some nice diversity to its economy. It certainly gets a lot of benefit from the resources sector, but it's also a very strong agricultural economy that feeds into Mackay. A lot of tourism because it's up in that central Queensland region heading towards the Whitsundays, so it benefits from that. And it's a strong government administration centre for regional Queensland. Very affordable, good rental yields. It's one of those. One of the things we're looking out for at the moment, Rich, is markets that had a surge of growth, because we're always looking at good timing to get into a market. Some of these markets had big growth from, say, 2020 to the end of 2022. So it's like 3 good years of growth. And since then, the last 18 months, they've kind of been in that pause phase between cycles. And we think some of these markets are poised to get into their next growth cycle. And of course, that's the optimum time for people to get into those markets rather than piling into markets they read are booming markets like Perth at the moment. The best time I've been there was 3 years ago, of course. So a market like Mackay is actually poised, we think, for a period of growth. So good timing to be considering this one.
Do you have any sort of particular criteria around the total population? Like some people feel safer investing in a larger regional centre, say like Newcastle, which has, almost 1 million people, versus Mackay, which has got around 177,000 people. Do you have a view on whether the population number is going to actually determine an outcome for an area?
Well, to a certain degree, we like to at least be in a centre that's got a population of, say, 30,000 and above. Sometimes smaller areas can have validity because of specific things happening in that area. Once the population starts to get above 30, it starts to take on a bit of critical mass and some diversity in the economy. That's the most important thing. You can have locations with bigger populations than that, but it's just wholly and solely based on tourism, for example. So it might be a larger centre, but its economy is very vulnerable to really bad weather, like we've had in Queensland over Christmas and holiday, which have really dented the local economy. So I think economic diversity is more important than the size of the population. Well, we certainly don't like investing in areas with a population of less than 30,000.
That's great. Yeah. I mean, in some of the growth factors, like East Mackay has got a median house price of 461,000, but its 1-year growth number is 11%. 10-year average is a 5%, but giving a 6.6% yield. If you look at something like Beaconsfield, it's had a very slow growth this year, 2%, but its 10-year growth rate 6%, but giving a 6.4% yield. So there's going to be variations across the whole of the town. But it's not just a tourism town. I think it's well located, servicing that proximity to Proserpine and the Whitsundays. And it's a really pleasant town. My auntie used to live just around the corner, so I used to visit there quite a bit. So yeah, really, really pleasant spot.
Yeah, just a factor that's probably worth mentioning to everybody, generally speaking, a lot of these regional centres we're going to talk about today, particularly the Queensland ones, they're built on very large rivers, and that can be a major asset, but also can be a worry because when they flood, that can be concerning. It's always very wise investing in these locations to check the flood maps. Don't be put off by that factor because despite what it looks like on the television news when we're in one of those periods, it's usual that perhaps only 5% of the metropolitan area is affected by inundation.
Exactly.
you just got to be careful that when you're targeting a property that you check out their propensity for being involved in a flood event. Most of the city won't be affected.
That's great. Good point. Same as for Brisbane as well. People think that all of Brisbane floods, but it's about 1% of the housing, if that, is affected by the flooding. Talking of flooding, Rockhampton, you've got a mighty big river flowing through Rocky. Tell us why you think Rocky's a good area to invest in.
Well, look, this is one of the busiest markets in Australia right now, and the reasons are that this is a strong, growing regional centre with a good, strong, diverse economy, and but very, very affordable. You've got suburbs like Circa, where the median price until recently was below 300,000. You've got a range of suburbs where the median price is somewhere between 300 and 400,000, and fantastic rental yields. You can get 7 or 8% on houses there. Very few places in Australia where you can get those sorts of rental yields, those prices, in a centre that's got prospects for growth. And that's why it's such a competitive market. It's quite a hard market to buy in at the moment because it is so busy. So many people want to buy there for all those reasons.
Yeah, and it's not, again, as you say, it's not just one pillar to its economy, but it's got agriculture, education, tourism, resources, just north of Gladstone, which we'll talk about in a minute. And it's an attractive lifestyle too. You've also got the university partnership between Central Queensland Uni and New South Wales and Queensland Health, and they're building an $18 million public health facility there at the Rockhampton campus. So in a lot of these areas, some of these both medical and educational facilities are a great attraction to keep younger people there, which then ends up attracting a lot of families as well. And there's also tourism, which injects around $500 million of expenditure into that Rockhampton region. And that supports around 5,600 jobs. So again, yeah, we find that's a very positive area to be buying in. I don't want to take up too much time in each area. Let's jump to Bundaberg, one of my favourite ginger beers, Terry, the old Bundy, and famous for its rum distillery. Tell us more about Bundaberg. What's the attraction for investors there, Terry?
Look, it's a very affordable city. It's a growing city. It's got some very strong businesses. You mentioned the people who make the ginger beer, and there's also the other business that makes the famous Bundaberg rum. They're serious businesses. These are national businesses that employ locally many hundreds of people each. But Bundaberg is the centre of a wonderful market garden. It's got wonderful rich soil. It's a wonderful place for growing things. And if you look at the numbers, the percentage of certain products that come out of the Bundaberg region, it's got strong business sector. It's got an export port. It's got an airport. The state government of Queensland is very advanced on plans to build a $1 billion new hospital in Bundaberg. It's going to take the economy of the city to another level. And then you've got this wonderful affordability. Now, Bundaberg's had some wonderful growth since 2020, but like Mackay, it had a period of growth, had a surge. Pricing went to another level, but still very affordable in that 350 to 500 range. And we think it's poised for another period of growth. And it's also got those above average rental yields as well.
It's had some pretty outstanding growth, Terry. Again, just looking at some of the stats, so Bagara, its median house price is now 680,000. Its average 10-year growth rate's been 13%. That's outstanding.
Sorry, Rich, that image on screen is Bagara. That's the coastal suburb just outside of Bundaberg, but within the city of Bundaberg local government area. It's just stone's throw from where they have the famous Monrepo turtle region, which attracts masses of tourists. I remember taking the kids up there when they were little to watch the turtles coming ashore to lay their eggs. It's a fantastic centre to visit, so interesting. But wonderful lifestyle, Bagara, where you've got homes fronting absolute frontage to the beach, but at relatively affordable prices. So that's another aspect to the Bundaberg market that makes it a little bit special.
Yeah, I mean, the yield's only 4.3%, but if you're looking to get both growth and yield, obviously there's Bundaberg South. Your median price is 355. average yield around 6.4. Innes Park, Kepnock, 445,000. It's seen a 12% growth, but almost a 6% yield. And Millbank, 420,000 and giving a 5.9% yield. So yeah, great mix of suburbs and opportunities in that Bundaberg market there for investors. All right, let's keep moving on. So after Bundaberg, we've got Gladstone. I've got personal experience to share with you in Gladstone. It's a fantastic town. It's just about an hour and 5 minutes south of Rockhampton. It's a very large aluminium smelter just out of town. And there's also another town called Calliope, which is about a 40-minute drive. Now, Gladstone's been one of those boom and bust towns. During, I think it was about, I can't remember what year, Terry, 2010, 2011, something like that, the LNG market just went nuts. And they were going to build 3 new liquefied natural gas plants around the area. And so many developers poured into this market because they could see the opportunity to build short-term accommodation for fly-in, fly-out workers and other long-term residents. Now, I personally bought a property there for about 250,000, bought a townhouse, did really well, but I was a little bit greedy and I held on to it for a little bit too long. And it went up to about 500,000, doubled my money, and I thought it was going to keep going and I should have exited the market, but no, I didn't. I held on, but I still sold it for, I think it was around 400,000, so I still did pretty well. But I guess I'd say time your entry and exit into that market really well. But it seems to have stabilised and recovered now. And as you can see on screen, houses are now 330 to 450,000 and good solid yield, 6 to 7%. But as I said, much more tied to resources. Terry, give us your take on the Gladstone market.
Yeah, that boom bust period you referred to as about 10 years ago, 10 to 12 years ago. And the problem was there were 3 massive LNG plants being built, and developers assumed that all these people working in those projects would be looking for places to live locally. But the developers of those big projects built their own temporary accommodation camps. And a lot of developers, they just built too many houses. But that's well into the past now. The market is well recovered from that. Vacancies are actually very low in Gladstone now. And just a point about those figures we have on screen, houses 330 to 450, that's kind of like the mainstream market we're talking. There are suburbs like Tennham Sands, which, like the name suggests, is a coastal suburb, which are more expensive, of course, but these are the figures for the mainstream market. You can buy very solid houses there in that price range and get very good rental yields. The economy of Gladstone is still very interlinked with the resources sector. So that gives it an element of vulnerability, but it's got a very important export port. It's got a lovely lifestyle. It's hop, skip, and a jump offshore to some of the Barrier Reef Islands. And we've got some very, very big and notable and successful business people like Andrew Forrest from Fortescue Metals, investing big money in projects that are a little bit different, like alternative energy projects. He's got $1 billion project focused on Gladstone at the moment. So all of that sort of speaks to Gladstone becoming a much safer and more solid place to invest than it might have been 10 or 12 years ago.
Cool. Someone was asking, are we going to be covering other areas? Yes, we'll be covering Victoria. We'll be covering Perth as well and some other areas. So stay tuned. We can't do them all instantaneously. So be patient and we'll be getting to some of those other areas as well. After Gladstone, Terry, let's head south down to Adelaide. Adelaide's been quite a standout performer, as we've seen in all the data coming through from the major data sources like CoreLogic and Domain. But tell me why we're particularly targeted here, Adelaide North in South Australia.
Yeah, this has been one of the great performers in Australian real estate in the last 4 or 5 years. Adelaide has been so underrated. I think probably the smartest property investment decision I ever made in my life was buying real estate in Adelaide some time ago. Back when it was considered to be a no-growth city. That's changed a lot. We always follow the CommSec State of the States report. They publish every quarter where they rank the economies of Australia based on certain metrics. And the most recent edition and the previous one, South Australia is ranked the strongest economy in Australia, which would surprise a lot of people. And so alongside the rise of the South Australian economy, we've seen the rise of the Adelaide property market. and it's had fantastic growth for the last 3 or 4 years. Still very affordable, still half the price of Sydney, much cheaper than Melbourne. Great city, got beaches, got a wonderful hills district, 3 wonderful wine districts within Kui. I just love Adelaide as a city, and as a property market, it's really performed. The northern suburbs are probably the cheapest capital city areas in Australia, with a possible exception of 1 or 2 areas in Perth, despite the growth they've had recently. And it was notable that when PropTrack published their figures for the leading capital growth suburbs since COVID for the last 4 years, the top 5 locations in Australia for growth over 4 years were all suburbs in this northern area of Adelaide, in the cities of Playford and Salisbury, where you can still buy houses. You can actually still buy houses in the 300,000s, but more mainstream now is that 400 to 500 range. And yields are still pretty good.
Interesting. Adelaide, as you said before, was often not on people's radar because it had very sort of subdued population growth. And but I know friends and other people that have moved down to Adelaide and really enjoying it. I mean, it does have a different climate. It does have a very different kind of atmosphere, but a very beautiful city. And yeah, I think it's got a lot going for it. I do think personally, though, that both Perth and Adelaide are definitely coming off their peaks. So I think if anyone's got thoughts that they're going to continue to see significant double-digit growth, I just say you need to temper those expectations back. And like any sort of creating any property portfolio plan, it's really important to have, set goals, but have realistic expectations as to what kind of growth is going to be achieved off the back. Because picking winners, when you've looked at areas that have got 13, 15, 19% growth, it doesn't necessarily mean that's going to be repeated again the following year or the year after that.
Yeah, we would certainly agree with that assessment, Rich. We're a little bit worried about the way people are piling into Perth in particular, but Adelaide has also had a couple of years of good growth, so it's quite high in the cycle. The other thing about the Adelaide North is so many jobs up there. I forgot to mention some really, really big employment nodes like the Edinburgh Defence Base and many others. Common fallacy is that everyone works in the CBD. That was never true even before COVID, but it's certainly even less true now.
Fantastic. What's our next one? Let's jump across to WA, and we'll head up northwards of Perth to Geraldton. So Geraldton's a beautiful town. It's got one of the most significant ports on the west coast of Australia, and a lot of mining materials go out of there around the world, iron ore and other bits and pieces. But you're getting houses with exceptionally good yields, $200,000 to $400,000. Major infrastructure spending. Tell us more. Is I can't remember. Is the Adani Railway connected up to Geraldton, Terry?
Honestly, not sure. What I do know is that as you said, major export port, which is being expanded with, and there's a big area near the export port where the state government of Western Australia is investing major infrastructure. So it's going to be creating a lot of jobs in and around Geraldton.
Yeah. So Geraldton's situated about roughly 5 hours north of Perth, about 415 k's north. Originally, it was a significant military post, but its population base it is fairly relatively small, around about 40,000. But in terms of the property market there, it's got some really good dynamics. Your average yield, as I say, is getting up there around that 7% mark. So, but coming off a much cheaper base, and I guess this is where it's good news for investors. And if you can diversify your portfolio, you can consider getting a lot cheaper property to get that yield that's going to help boost your cash flow over time.
And in this market, Rich, some of the markets in Western Australia, particularly Perth, are very, very frenetic. Geraldton, I think, is not in that condition at the moment. It's a market where you can buy sensibly. You don't have to rush and buy recklessly to get into this market.
Yeah. Okay. Let's move a little bit further south in WA down to Bunbury. south of Perth. Again, really pretty town. Houses between 350 to 500. But as you say, they're a busy, competitive market. What's driving that busyness there and that competitive market there, Terry?
Look, I think partly it's people seeking an alternative to Perth, which it's become very, very hard to buy in Perth because things are selling so quickly and for prices that don't necessarily make sense. So people have been looking for good alternatives. And Bunbury's the largest regional city in Western Australia. It's a very important city. It's growing. It's got a major export port. It's got that strong economy, and it's got lifestyle. So investors are targeting as an affordable alternative to Perth and a place where you can buy with due diligence. Although, as we pointed out on the slide there, it is now becoming quite busy and competitive as well.
Yeah. Again, like the stats in terms of median prices, there's some suburbs, for example, like Geraldton, which has got a 700,000 median price, but has a 7% average 10-year growth rate, but a 4.6% yield, bit of a lower yield. But compare that to, say, East Bunbury, $425,000 median house price, and giving a 6.2% yield. Or even cheaper at Carey Park, $351,000 median, 8% 10-year growth rate and a 7.3% median yield. But the thing about the vacancy rate in that area, it's currently sitting at 0.3%. So to my mind, it's just like if you have a rental property, it'll be rented tomorrow. Just goes to show the depth of demand in that market.
Absolutely.
All right. So, and again, there are some bigger projects, some pretty significant lithium hydroxide and silica production plants and other types of minerals that are all being developed in that area. All right, let's move on, Terry, to Mandurah. Now, Mandurah has been through a few iterations. I think it was when the train line was extended, everyone sort of piled in. Again, really attractive. It reminds me a bit of the canals of the Gold Coast, that photo there. But yeah, really attractive town. But a bit closer to, it's only about, 2 hours south, I think, from Perth, or is it 1 hour? I forget.
Between 1 and 2, I think, Rich.
Depends how fast you drive, right? So,
but you've got really good, strong highway links as well as the rail links. So it's some people actually regard it as part of the Greater Perth area. We regard it as regional, just outside of Greater Perth, but it doesn't really matter. It's a wonderful location with all these different water environments. It's on the ocean. It's got these sort of canal-style living lakes, and so affordable for what it offers. I mean, there are more expensive suburbs than that again, but the mainstream market in Mandurah is, I think, ridiculously cheap, based on the lifestyle that it offers and the proximity to Perth.
I mean, not that Perth's a super busy city compared to Sydney or Melbourne, but I really like Dunsborough myself as a holiday destination. But there's lots of things going on in that area. I mean, just the numbers around the gross regional product of the area is $3.6 billion, and that continues to rise. You've got a lot of health and social industries generating around $458 million worth of activity. So it's not short of economic drivers. Let me just give you a bit of a snapshot of the property market in that area, where it's predicted to grow quite significantly. Just in terms of population, that's one thing that's very significant from this area. Over the next decade, it's predicted to grow by around 30,000 people, from 90,000 to 120,000 over the next 10 to 12 years. So that's quite significant in terms of the housing market, because they're not building enough properties in that area, much like a lot of other areas of Australia. But your median house price for a suburb like Dawesville is currently $565,000 and generating a 5% yield. A suburb like Falcon, $500,000, 7% average growth rate, giving a 5% yield. Lakelands, $496,000. So they're all fairly similar in terms of median prices, $500,000 to $600,000. but a very attractive lifestyle and still really close proximity to Perth. So it's another more affordable option.
Yeah.
All right. How are we going for time? Not doing too bad. We want to get to the Q&A section. So let's talk about Rockingham and those areas in southern Perth, Terry. What's the attraction of that? Seems to be a cheaper price point, would you say?
Yeah, and Perth has been, until recently, the most affordable capital city in Australia. That's changed somewhat in the last couple of years because it's had such prolific growth, and it still is having it. But the more affordable end of the market has been down in the southern part of the Greater Perth area. The municipalities of Rockingham, Kwinana, and Armidale have been to the fore, attracting a lot of buyers, home buyers, and investors because of that affordability. It's had wonderful growth, but still affordable places. The thing about Rockingham, many of those suburbs are actually fronting the ocean. They have beaches, and also close to that massive employment zone just a little bit north of Rockingham, where there's all the big resources companies have major operations, refineries, etc. A lot of people work there. So it does offer a lot. But of course, the thing about the Perth market generally in these areas in particular is that they've had 3 years of growth. It's quite frenzied there at the moment. It's difficult to buy sensibly with due diligence. And so people need to be careful. I think some people are throwing silly sums of money to beat the competition, buying without checking things out properly, because days on market can be less than 10 days in some of these suburbs, which means things are selling almost as soon as they're listed. It's danger time. People need to be think carefully about what they're doing in these markets at the moment.
Just a good point there, and I'll talk about that when in terms of, I'll just mention it now in the buying process there. You need to build in a due diligence period. And again, you need to buy subject to valuation, subject to finance. So what we do for part of our due diligence process for these, again, each state has different laws and different contracts. So you'll need to use a solicitor that's licensed in each state. So we have local people on the ground doing this work, acting as your buyer's agent if you engage us. But you must buy with a small due diligence period. You've got to get a pest and build done. You've got to get the relevant checks done before you buy, because the worst thing you can do as an interstate investor is buying blind. It's just not worth it, because you can be buying a major problem.
Too many people are doing that at the moment, I think, Rich, in the Perth market. And I just think some of them are going to regret their actions. It's a market where it's really important to have professionals on board, like a good buyer's agent who can help you through that difficult market in terms of the fanaticism that's in the Perth market.
Let's move states now, Terry. Let's get over to Geelong, just south of Melbourne. Got a fantastic AFL team. Love that photo you've got there. Tell us about why you think Geelong has got good future prospects for growth and also for yield.
Yeah, as a bit of background, we think Victoria is a market that people should be thinking about a lot more. While everyone seems to want to pile into Perth at the peak of the boom there, we think the sensible people would have been there 3 years ago before it started to go crazy. When we started to talk about with our reports. Now, Melbourne and Victoria is pretty much at that point of the cycle now. I think it's at the beginning of a growth cycle. The Victorian economy is very strong, one of the strongest in the country. The latest population data very much very strong for Victoria generally, and it's an opportune time to be really looking at these markets. Now, Geelong's one of the strongest regional cities in Australia. I believe it's transitioned very successfully from the old economy, where it used to be a smokestack economy, till now the biggest employment sectors are education and medical services and IT. So it's a very different economy than it used to be. That's made that transition very successfully. A lot of jobs in Geelong, but also very good transport links for people who live in Geelong and work in Melbourne. It's harder to find.
I was going to say, I'd liken it, Terry, just to jump in. I liken it to sort of the way Newcastle It's sort of like it's Victoria's equivalent of Newcastle. Newcastle used to be seen as the BHP town, smokestacks. Same for Geelong, used to be sort of an industrial town, but it's gentrified a lot. Really attractive area, much more affordable. I think during COVID, we saw a significant number of people move there because of its cheaper and attractive natural environments.
And a wonderful lifestyle. It's a peninsula basically, almost surrounded by water. So I think that's an underrated element of the Geelong market. It's harder to find those purchases below 500,000 there now, but there are some opportunities still.
Yeah. I mean, I think you find that the growth rates have been pretty significant in that market, but definitely a market worth looking at more. We're just going to whip through before I'm going to get to a lot of the questions that are coming through thick and fast. We'll skip Melton. Let's talk about Ballarat as a Victorian regional. What's your fascination with Ballarat? Why have you recommended that one, Terry?
Well, a really strong and wonderful regional city. It's had a great track record for capital growth in recent years. And it's one of those places we like because it had a strong growth phase from 2020 to the end of 2022. It's been through in the last 18 months that pause between cycles, and we think it's an opportune time to be buying there before growth starts to reignite. Despite the growth it had in those recent years, you can still find plenty of suburbs where median prices are in that range, 450 to 550. And it's probably worth pointing out that we're talking today about where you can buy for under 500,000. Why would we talk about a suburb where the median price is 550? Well, the median price of 550 means that half of all sales have been below that number. So you can still buy in a suburb with a median price that high for under 500,000. So lots of
I was outstanded. I think we just mentioned it off air, Terry, before. I've been outstanded by the stats of Ballarat, just the 10-year average growth rate, 8, 9, and 10% across a whole raft of suburbs, from Black Hill, Brown Hill, Canadian, Delacombe, all done really, really well. The challenge is that the yields are not quite as high as what we're looking at in either Perth or in northern Queensland. So that's the challenge, that people have got to look at their own individual financial situation and go, what's the best combination that's going to work for them? But definitely I'll be putting Ballarat on the radar. The other thing to mention, Terry, I think it's in your reports, is just Federation University. Tell us about that. I mean, because that's got a large number of students, right?
It does. And when you've got a market or a city or suburb that's got a major university campus in its midst, that's actually a very strong element to have for your property market, because you're almost guaranteed really strong rental demand. But also, a lot of people actually work in these facilities. I love hospitals and universities, and quite often they cluster together in location. A lot of jobs in building them, but even more jobs in running them. So you've got a lot of actually quite highly paid professionals working in these facilities, as well as the students and the nurses, etc., that need to be there for a large part of the week. So that guarantees a lot of buyer and rental demand in the area. So Ballarat's got that in its mix, as well as a lovely historical fabric, lots of affordability, nice lifestyle, and for those who live there but actually have a job somewhere in Melbourne, it's a pretty good commute. You've got good motorway and rail links, and so it's commutable to jobs in Melbourne. Keeping in mind that not everyone works in the CBD, as we've mentioned earlier. A lot of jobs in the north of Melbourne, which is very proximate to Ballarat.
And the old gold mining town, Sovereign Hill, is a great tourist attraction, bringing in something like 500,000 visitors a year. So fantastic place to take the kids. Let's jump across to the other side of Melbourne, to Latrobe City and region. So Traralgon, Morwell, and Mo. Tell us about what's driving your thoughts on that part of Victoria there, Terry.
It's another one of those places where it had a lot of growth from 2020 to the end of 2022 from a low base. Despite those big growth rates, still very affordable. Maui and Morwell are still in the 300,000s, and Traralgon is in the 400,000s now. But very strong economy, despite the fact that the older economy of coal-fired power stations is being phased out. but there are other important things happening there. State government's recently invested big money in the Latrobe City Hospital, as an example. A lot of people move out there because it's within striking distance of Melbourne, but so affordable, so you can have that affordable, more relaxed lifestyle. So for investors, very affordable, buying really good rental yields by Victorian standards. I would point out, you're correct with your comment that the rental yields are a little bit lower in Victoria, but I think that may change because there is such a chronic shortage of all types of property in Victoria, and no answers to that shortage in sight. That's a national factor, but even more so in Victoria, I think.
Actually, there was a question I'll come back to. We'll go through all the questions that I've missed, but there was a question, what's the compelling reason? Oh, there it is. Victoria slogged investors with high land taxes. What's a compelling reason to invest there? And I think the government, it might require a change of government that eventually might remove some of the draconian taxes that they've put on extra land tax and on investors. So, I mean, in any state that you invest in, you've got to cop the tax, but it's also good to diversify your portfolio holdings across different jurisdictions, so you're not all slugged with exceeding a land tax threshold in one area. But I think Victoria is going to get a significant share of migrants, Terry. I think a lot of migrants are going to end up in Victoria. Melbourne has just exceeded Sydney's population and will continue, I think, to grow. But there's, again, limited land or developable land in different areas. And I think that will continue to drive demand for the Melbourne market. So, and there's a lot of what we call old money in Melbourne being recycled, and that's going to help to drive that market. So I think I've got property in Melbourne, not planning to sell it, looking to buy more down there. And I think it's got a great opportunity for growth. The yields won't be quite as high, but I do think the yields are going to improve, and that is a compelling reason to invest in that market. I'll just go back to one point about Melton. The reason I skipped Melton, I said to Terry before, I'm not a big fan of Melton. I think there's been a lot of new construction, and there's still a fair bit of land surrounding the suburbs of Melton that could be developed. So I think the capital growth will be inferior to a lot of the other areas that we've recommended before. So that's not an area that I'm going to promote as much. Terry, let's jump into areas where we are not recommending. So tell us your no-go zones, Terry.
Well, it's very much about the economies and the narrowness of economies in certain places. Because we think that, firstly, we believe that real estate markets are very local in nature. We don't have an Australian property market. We have thousands of local markets, and very much they arise out of what's happening in the local economy. The local economy is strong and diverse, creating jobs, infrastructure spending, then we'll consider the area. Where it's a one-horse town in terms of the economy, it's just reliant on mining, it's just reliant on tourism, or just country towns where it's all about agriculture, which makes it vulnerable to, say, drought or bushfire. Australia's the land of the natural disaster, and we've got a sole economy driving your property market, and something adverse happens, then property values will suffer. So mining towns, definite no-no. They've been the graveyard of many investment strategies, and I think we've probably all learned that lesson. I hope so. It's amazing how many people own 5 properties, and they're all in the one mining town.
Let's talk about that, Terry. We chatted offline about the investor that bought 6 properties in Moranbah, an hour west of Gladstone, and that particular investor thought they were super smart, ended up going bankrupt, and now have a $3 million debt they can't pay back. So you do, as I say, you do need to be very careful about diversifying where you're buying, and particularly buying your first or second property is super important, because the whole reason you're going into investing is to build up a bedrock of wealth that you can then leverage to buy your next second, third, fourth properties. And there's a bit of a trick to doing that. So it's not about trying to find a unicorn or something like a Jack and the Beanstalk that's going to be the silver bullet. It's just about buying a good quality, well-located, well-researched property that's going to perform over the longer term. And look, there'll be bumps in the road, but don't over leverage in one particular location is what we're saying today.
Yeah. If you own 6 properties, ideally you'd own them in 6 different states or territories. Geographical diversification is important. for the strength of your portfolio, but also for the avoidance of land tax.
And the other thing is, yeah, tourism is another one. I'm not a big fan of Cairns. I like visiting Cairns, lovely area. But my feeling is it's too tourism reliant. I've still got a long memory back to the pilot strike when you couldn't get in there for a while. And there's also some areas or far-flung regional towns with very small population, with not a lot going for them, that are just going to plateau or even decline. And you might get an amazing yield, but just be cautious about then reselling that property to another investor. It might be good today, but always think about your exit strategy. That's a key piece of advice that I'd like to share with everyone today. Anything else with no goings you wanted to share, Terry?
Look, you mentioned that pilot strike way back when. Even more recently, just over Christmas and again in other holiday periods this year, really bad weather has really had an adverse impact on sort of Queensland tourist economies, and places like Cairns have suffered a lot. That doesn't help the local property market in terms of growth. So it's important to have that diversity. If you're buying in North Queensland, we much prefer Townsville to Cairns because it's got that much stronger, more diverse economy.
Absolutely, 100% agree with that. We're going to jump into the Q&A section now, and I've got a bunch of questions there that haven't been answered. So please keep your questions coming. Just before we do that, I'm just going to outline some of the 7 steps that you need to take, whether you decide to do this on your own or whether you decide to use someone like ourselves as your buyer's agent. These are the things that you need to do. And I'm always advising clients to sit down and think about the end in mind. What's your strategy? Are you looking to buy a property to renovate? Are you looking to buy a property that's just going to be a great buy and hold property? Whatever your strategy, be clear about that. Get clear on the brief, get clear on the location, and get clear on the property type that's going to work for your end goal. Then you've got to identify the specific location as to where that's going to be delivered for you. So Terry's company, Hotspotting, provides some fantastic reports. Definitely worth buying. If you use our company, that's included as part of your research. And then from there, it's about getting out and identifying and shortlisting specific properties that meet your brief. So we find that most investors on their own take around 6 to 12 months to get to know a market, identify it, get to have a feel of it. But within 12 months, sometimes the market could have moved, as you've seen. It can move 10, 11, 12%. So you might have missed out on that growth. So it's really important to act not too quickly, but within a reasonable time frame. You then got to work out which property is the best one to buy, evaluate it, work out what price is a relevant price to pay for it. We do a really detailed evaluation for our clients, and we'll provide that as part of our service, giving you advice on comparable sales so you're not overpaying for the property. Then you need to do your due diligence. So pest and building reports. You might need to check sort of zoning issues, flooding issues, fire consents, insurance, all of those kind of things need to be determined. Once that's been ticked off and your contract's reviewed by your solicitor, done their title searches, then it's time to sign your contract, negotiate the price and get it unconditional, and make sure your valuation stacks up. And then the last step in the process is going through to settlement and finding a property manager that's going to rent it and look after it for you. And that's easier said than done, but that's again part of our service. We provide and recommend a local manager that will be there for you on tap to help you along that way. Some of the reasons you might want to think about using a buyer's agent are these. We can help you design that roadmap, that brief, and that strategy. We get access to a lot of off-market properties you'll never see advertised, particularly in those markets we've just talked about today. We have buyer's agents on the ground that can identify and have relationships with local agents and local people to get access to the off-market deals. It certainly saves you a lot of time, all the grunt work of doing the searching, giving you that information, the insights, and helps you to crunch the numbers and essentially just buy with a lot more confidence. What do we charge? We work on a fixed fee basis. So any property under 700,000, it's the same fee. It's a total fee of 14,200, including GST. And that includes an engagement fee up front of 3.3 up front. So for that, you'll get someone working alongside you, fast tracking the research, being a professional negotiator and helping you get the best outcome possible. So as I said, it works out at roughly, could be a 2% fee that you pay. But if you're buying in a market that's growing at 10%, it'll pale into insignificance, and make sure you get the right quality of property. Also, it's considered an acquisition cost, so it's tax deductible as well. So Terry, let's jump into Q&A. We've got a whole bunch of questions there. So let's go on in this area now. So let's have a look. First question we had from Sandra: is it correct that demand for housing is primarily led by immigration? If yes, is this demand sustainable over a very long period, meaning investors can look for capital growth until retirement? What are your thoughts on that?
Look, I don't think demand for housing is primarily led by immigration. I mean, it's a factor, and certainly locations with strong immigration happening will have elevated demand, but it's certainly not the prime driver in most markets. So, I think the whole population growth thing is a little bit overrated. Some people preach, buying the areas with the strongest population growth. Sometimes all it means is those are the areas that have got land available for new housing estates, and that's why they're having big population growth. There are other more important factors in play, I think.
Yeah, great. Yeah, I agree. I don't think immigration is the sole factor. Often it's internal demand, or it's downsizing, or as you call it, the flight to affordable flight to lifestyle. So all of those factors are leading to demand for those different areas. I think that comment, the second one there, was about the hype in Townsville. We've kind of covered that. Always hear about high crime in Townsville. Yeah, look, there is some pockets. It's like any particular area. There are pockets of crime, so it doesn't affect the whole town. Absolutely not. So there are definitely areas that have a higher crime rate, but that's something that our local buyers agents can identify. We've talked about Victoria. How do we find out about commission housing? Again, that's local knowledge. That's what you've got to find out from locals. Comment on tax deductions of new versus established stock, perhaps new versus old. Yeah, my comment on new versus old is that in our company, a property buyer, we are typically always buying established properties. Now, it doesn't have as high a tax deduction, but the reason we buy established properties is simply because they're better value. Tax deduction is an icing on the cake. You can still get tax deductions and depreciation allowances from an older property, but don't buy a property just because it's shiny and new. It's like buying a brand new car. The minute you drive it out of the lot, it depreciates in value 10%. Now, with properties, again, we look at every property independently and assess it independently. But because of high construction costs, you often find that the brand new property doesn't represent good value compared to buying established. We've talked about Mackay. Are there plans for the national government to incentivise overseas migration to regional areas? Good question. I think part of the government's, I don't know for sure, but I believe that part of the plan is to encourage people to move to regional areas. Do you know any further facts on that, Terry?
I really don't. I'm sort of vaguely aware that there are some schemes to encourage certainly certain professions to move to regional areas, but I don't have any details, unfortunately.
Okay. Yeah, cool. Okay. We'll just skip down. We've covered Mackay. Someone's asking about Barbara area. Do you want to comment on that one? There's a lot of urban area being developed in the Barbara area.
I think they're talking about Bagara.
Bagara.
Yeah, just outside of Bundaberg. I think sometimes people are concerned where there are large areas of land. There's only a concern if developers go crazy and build too much of it too soon. It's not really a concern at the moment because we have the opposite problem. Builders and developers aren't able to bring on as much supply as they'd like to because of the shortages of everything and the high construction costs, making a lot of projects unviable. So for the foreseeable future, those sorts of concerns of oversupply are not a major factor. I don't think Gold Coast is a great example in our history of oversupply, but at the moment it's got a chronic shortage and will continue to for years because the big projects just don't stack up financially with the high costs.
Yeah, got it. Okay. What's the other one? Do you reckon Gladstone will recover to its pre-boom era again? I don't think it will have the same massive demand that we saw when the LNG gas plants were announced, but I think it will just tend to follow a cycle, more based around demand for commodities. But I do think it's definitely a stabilised market, Terry.
Yeah, I think so. Yeah, it's
Yep.
the boom bust market it used to be. It's a more normal market now.
Someone's asking the benefit of North Adelaide versus South Adelaide areas.
Yeah, look, we like the Onkaparinga local government area in the south of Adelaide. It's got some seaside suburbs like Seaford. It's got also got a major wine district, McLaren Vale. So there's a real lifestyle element to that part of Adelaide. The rail links were extended a number of years ago, so it's got, and the Southern Expressway was upgraded. So you've got good road and rail links to central Adelaide from those Onkaparinga suburbs, which not as cheap as the northern suburbs, but still very affordable, and with those extra lifestyle elements of wine district and beach side suburbs.
Okay. Maria's asking, why is Hervey Bay not in your discussion? Is this city not performing well when it comes to real estate investing? Yeah, look, my thought on Hervey Bay is that it's got a lot of retirees and it's got a lot of tourism. I don't think it has enough drivers in my book to be a key area that I'd include on my recommended list. Terry, what would you say to that?
Firstly, that we couldn't include everywhere. That's good because we've got limited time, so we chose areas that are indicative of the key points that people need to become aware of. But also I agree with you that Hervey Bay is a little bit of concern because its economy is a little bit narrow. I think, it had wonderful growth again, that period 2020 to 2022. It will grow again. I think it's significant that Sheraton, one of the biggest hotel chains in the world, has recently announced it's going to spend $500 million on a resort there, which is not the sort of thing you'd expect to happen in Hervey Bay because it's kind of a down market tourism area. But it does have a future. It's right there looking across to what used to be called Fraser Island, one of the, I think it's the biggest sand island in the world, huge tourist attraction. It's a population growth area, so it has prospects, but we prefer, as we've said in the broadcast, those more diverse, well-rounded economic regional cities like Rockhampton and Townsville.
Great, yep. Someone's asking about the recording. Yes, as I mentioned earlier, everyone will get a copy of the recording today. When you mentioned Geelong, sorry, I'll just go about, keep going down. What are your thoughts on commercial property investment? Again, that's a topic for another day. Quick thoughts are that you don't want to start out on commercial as your first investment simply because of the risk of vacancy. Very important to have a couple of other resi properties up your belt and have a big buffer before you go into commercial. But we have a commercial buyers agent on team, the commercial division, so it's a different discussion. Talking about North Melbourne, Seymour, Kilmore, Beveridge. Okay. What are your thoughts on the areas north of Melbourne as you're heading out of town back towards Sydney?
Look, that's where we're going to see incredible population growth. We're talking about Mitchell Shire, all those towns projected to grow enormously. We're seeing pretty good capital growth there. Proximate to that northern precinct of Melbourne. So a lot of jobs there around the ring road with the big warehousing distribution businesses have a major presence up there. So there's lots of jobs there. The fruit and veggie markets moved up to that part of Melbourne some years ago. So there's lots of reasons for people to buy in areas like Seymour, Kilmore, Beveridge, and they will grow a lot because there's land there to develop new estates. So
yeah, great.
And it's quite affordable compared to buy now. So it's an affordable lifestyle buy if you're targeting an area like that.
Probably got time for about 3 more questions. I'll just pick some at random. Would Brisbane be considered a tourism town with a no-go zone? Any opinion on units under 500K there with infrastructure and the Olympic Games coming up? Look, Brisbane is absolutely a great town to invest in. Finding options under 500K has become more challenging. Really, 600 has become the old 500. So buying in areas, we've been buying in areas like Redbank Plains out just east of Ipswich, which have been quite good, but extremely competitive. Properties are generally selling within the first, 5 to 10 days of coming on the market. As for apartments, the apartment market in Brisbane has finally recovered, but it did languish for about 10 years or more, Terry. There was a big oversupply, a big overhang. Again, you can buy apartments. You just have to be super selective about where you're buying them. And I do think the Olympics will give Brisbane a boost, but it's not the only reason to invest there. You've mentioned Newcastle a few times. What's your opinion on it? Love Newcastle. I think it's a fantastic area to invest. We didn't include it today just simply because of the challenge of the price point. We wanted to talk about areas under 500K. Newcastle, you'll generally need a much higher budget for that area, but definitely very, very solid potential. Would you agree, Terry?
Yeah, no, Newcastle is a fantastic regional city and economy, very strong. But yeah, it wasn't part of this discussion because it's a more expensive city. It's affordable relative to Sydney, which is not too far away. So it benefits from relative affordability, but it's not a sub $500,000 market. If you head a little bit out into the Hunter region, the towns out there, it's a little bit easier. But even there, it's typical housing is now probably above $500,000.
Yeah, great. 2 more questions. Someone asking about the Gold Coast as a tourist spot. What's your thoughts on buying a 2-bedroom unit for holiday letting on the Gold Coast, Terry?
Look, apartments generally are really coming into a period of strength. There's no doubt there's a paradigm shift in the market nationally where more and more people are opting for attached dwellings, units, townhouses, apartments, for lifestyle reasons, for affordability reasons, but also for reasons of safety. It's becoming a big factor for people. People are worried about all the stories in the media about crime and people's safety, and people feel perhaps safer on the 15th floor of an apartment building. So there's a lot of demand now for apartments, and we're starting to see them outperform on capital growth in competition with houses. The Gold Coast is a location that's benefiting a lot from that. It is a tourism market, but nevertheless, whereas in the past it's suffered from periods of oversupply, it's got the opposite problem at the moment because lots of the big projects are just being deferred or cancelled because of the costs. They're just not viable to build them at the moment. So we're going to see, at least in the short to medium term, some pretty good growth on the Gold Coast.
Someone's asking about buying off the plan versus buying established. For that, I would say definitely buying established. You can still buy off the plan, but again, be very cautious. There's a lot of risks, a lot of unknowns, and you really need to be very, very careful about that. What else? I'm just typing an answer. I think, Terry, look, we've got so many questions. I'm really sorry, folks, that we're going to have to wrap it up. But look, please reach out. If you do have any other questions, reach out. And we'll be sending around a copy of the presentation and love to connect with you. I can highly recommend Terry's reports. And if you are interested in potentially using our buyer's agency services, please reach out. There'll be a link in the email that goes out. But can I say, Terry, big thank you for sharing your knowledge. You're a font of wisdom. You've got so much inside that head of yours, but thank you again today.
Yeah. No, it was a pleasure to do these webinars with you, Rich. We always get a great audience. Something about you attracts big numbers. Those were record numbers today, including the number of people that tuned in live. I would urge people to, if you want to get into investment properties, get a really good buyer's agent as part of your team. I think it's false economy to not do it. When I buy, I always use a buyer's agent, and it surprises some people. So surely you know enough yourself. Well, it's not about knowledge. It's about the process and having someone on your team that can handle, because I've got a very busy life and it saves me a lot of time. And it's nice having a sounding board. I'm not the fountain of all wisdom about real estate. I like having somebody else who knows a lot that I can bounce off. and give me an alternative viewpoint. So you can get all of that with a buyer's agent like Rich Harvey and his team, who I would point out keeps winning national awards. So he must be doing something right.
Thanks, Terry. It's good to hear you use buyer's agents too, mate. But no, like you say, I mean, it's one thing to have the data. It's another thing to execute on actually buying a property. So it's really important that that's part of the process. Look, thank you everyone for participating today. We look forward to seeing you again on our next webinar, and we say thank you and bye for now. Thanks, Terry.
See you later, Rich, and see you later, everybody.
Thank you.